Part 3 of our real estate extravaganza. 25 more questions for 2025. Getting you ready for that real estate examination in every state, anywhere, everywhere. Here we go. Part 3. Coming at you. Question number 51. When comparing a recently sold home to a subject property for market analysis, how should you adjust the sales price of the comparable if the comparable has a feature the subject property lacks? Letter A. Add the value of the feature to the comparable's sales price. Letter B. Subtract the value of the feature from the comparable's sales price. Letter C. Add the value of the feature to the subject property's estimated value. Letter D. Make no adjustments as the comparable's price reflects the market conditions. And the answer? Letter B. Subtract the value of the feature from the comparable's sales price. So we would simply adjust the comp down. And understanding the basics of how to do some adjustments might serve you well. This is a pretty good question, as you might find that they'll be exploratory here, trying to figure out what else to ask you regarding the sales comparison approach. And when we're dealing with adjustments, this is a classic approach to it. And many times students don't know whether you adjust up or down based off of the issues, so make sure you study that in your books. Question number 52. In a leasehold estate, which term describes the tenant's interest in the property? Letter A. Freehold estate. Letter B. Fee simple. Letter C. Leasehold estate. Letter D. Remainder interest. And the answer? Letter C. Leasehold estate. This is a pretty straightforward question. You need to know some of the basic interests in real estate. A leasehold estate is what they call it, and the tenant's interest is simply known as a leasehold estate. Question number 53. Under federal environmental laws, what is the seller's responsibility regarding lead-based paint when selling a home built prior to 1978? Letter A. Remove any lead-based paint before listing the property. Letter B. Disclose any known presence of lead-based paint. Letter C. Have the property tested for lead-based paint before selling. Letter D. Remove any lead-based paint before the sale closes. And the answer? Letter B. Disclose any known presence of lead-based paint. Okay. Properties built prior to 1978 have a higher probability of containing lead-based paint. And in the United States, we have these lead-based paint laws which require the disclosure. So known exposure, known defects by the seller needs to be disclosed. But it doesn't mean that the seller has to remove the lead from the property, that you can be a seller and sell a property with lead, then you can be a buyer and buy a property with lead. Now, really, the lead-based paint laws are all about the age of the child that's going to be living at the property on a full-time basis. Check your local states. Depending on where you are, you might find a little bit more or less regarding lead-based paint. In areas where they've built them up fairly consistently after 1978, you tend to see these types of things diminish. But however, there are lead-based paint laws on the books, and you definitely want to be aware of them before you take these exams. Question number 54. What does the loan-to-value or LTV ratio represent in real estate financing? Letter A. The portion of the property's value covered by the buyer's down payment. Letter B. The relationship between the loan amount and the property's appraised value. Letter C. The amount the buyer must pay upfront to secure the loan. Letter D. The total cost of the loan, including interest and fees. And the answer? Letter B. The relationship between the loan amount and the property's appraised value. So LTV or loan to value is one of those items that you might have to calculate, and you want to know the definition of it. And that's pretty standard stuff that you typically will see on the finance sections in the real estate examinations. So you want to know that. The other thing that you might want to know is that The ultimate loan amount is based off of the appraised value of the asset and not the ultimate sales price or the contract price. So it's whatever it comes in at based on the appraisal. Okay. Question number 55. A property owner wants to build a daycare in a residentially zoned area. What process would they typically follow to seek approval? Letter A, file for a variance. Letter B, request a zoning amendment. Letter C, apply for a special use permit. Letter D, submit an encroachment application. And the answer is letter C, apply for a special use permit. So when we're in residentially zoned area or commercially zoned area, many times if we want to use it for some kind of other use, sort of the opposite use, in this particular case, it was in a residential area, but we wanted to use it for a daycare, which is a commercial business, then we need to apply for a special use permit. And that's typically what you will ask for. And jurisdictions might call it different things. So you just want to know this generally speaking, but a conditional use or a special use permit is what they call it. Also remember, they could call it a conditional use permit as well. Question number 56. What type of interest does a buyer typically hold in a property after signing a purchase agreement but before the transaction officially closes? Letter A, fee simple ownership. Letter B, equitable title. Letter C, legal title. Letter D, leasehold interest. And the answer is letter B, equitable title. So equitable title versus legal title. When they close the transaction, the buyer, then they receive a deed. And the deed represents legal title. So the deed is legal title. But before that, and during the time you own something, the right to own that something, the bundle of rights, it's something that is understood in the eyes of the United States law that the owner of something or the soon-to-be owner has certain equitable rights. So equitable title isn't a physical documentation, but this is the interest that the buyer receives before they close, but after they sign the purchase agreement. This is a vocab phrase that I'm pretty sure you're going to want to know for your exams.
And the answer is letter B, equitable title.
Excellent. This is my co-pilot, Maya, and it's almost her bedtime, and she wanted to do a question. So I hope you guys learned something. Study hard, study well, and say good luck.
Good luck.
On your
test. Letter B, equitable title.
Equitable. Question number 57. Which of the following encumbrances typically affect only the title of the property rather than its physical use? Letter A, restrictive covenants. Letter B, mechanics lien. Letter C, easement in gross. Letter D, encroachment. And the answer is letter B, mechanics lien. Now, a mechanics lien affects the title to the property. Then the physical use is unencumbered in that regard. So remember, letter B is a mechanics lien, and a mechanics lien is a type of lien placed on a property for the non-payment of services rendered. It could be materials, it could be services, it could be contractor work. All of those professionals in the building trade have the right to get paid for their services and their products. And if you don't, then a mechanics lien can be filed. So you want to know that the mechanics liens affects the title to the property, but it doesn't affect the physical property. And that's an important distinction to understand as you're learning about the different types of liens. Mechanics liens are definitely potentially on this exam. Question number 58. A home sells for $350,000 and the buyer is making a 10% down payment. The listing agent charges a 6% commission. How much is the listing agent's commission? Letter A, $18,000. Letter B, $20,000. Letter C, $21,000. Letter D, $24,000. And the answer is letter C, $21,000. So with these types of questions, what you want to remember is that the listing professional is only paid based off of the ultimate sales price. And the 10% down payment is a bit of a red herring. So you want to just make sure that as you're doing your math, sometimes they will put in all kinds of things that don't apply to the particular question. So read it confidently and then make sure that you understand what it's asking for. So it's asking for how much the listing agent's commission was. And from that, you can basically tell. Now, if the other side of this could be, what is the origination fees or something like that? And origination fees are based off of the loan amount versus the commission, which is based off of the total selling price, okay? Question number 59. Which characteristics are most important when selecting comparable properties for a comparative market analysis, or CMA? Letter A, the properties were listed within the last 12 months. Letter B, the properties are located in the same school district. Letter C, the properties were sold recently and are similar in size and feature. Letter D, the properties were built around the same time as the subject property. And the answer is letter C, the properties were sold recently and are similar in size and features. This is the most important characteristic of the CMA amongst these answers. And so this kind of a question you want to be careful of, because all of them look pretty good. Some of them were, the school district thing was kind of, off. But obviously that school systems are an important thing. So maybe the writer was thinking, hey, look, if I put that in there, maybe they're thinking about school districts, et cetera. And people make buying decisions based off of schools and school systems. But the real important thing here when we're comparing it to other properties is the recency of the sale and the similar features and size. Question number 60. A principal is to a client as a fiduciary is to a letter A, customer. Letter B, agent. Letter C, lender. Letter D, vendee. And the answer? Letter B, agent. All right, so a principal is to a client. So a principal is also known as a client, and a fiduciary is also known as an agent. So remember, all agents are fiduciaries of their principals. And a fiduciary, everything that they do or don't do has to financially benefit or to better the position of the principal or the client. So basically, this was a good question, kind of making similarities and understanding that we can use phrases like principal and client interchangeably and fiduciary and agent interchangeably as well. Question number 61. Which of the following must a seller disclose in most real estate transactions? Letter A, the seller's motivation for selling. Letter B, all previous offers on the property. Letter C, known material defects in the property. Letter D, any outstanding mortgages. And the answer is letter C, known material defects in the property. So, known material defects and known material facts must be disclosed by the seller or possibly face the wrath of consumer protection laws. And in most states, that's what you're seeing. It's not a caveat emptor situation, which means buyer beware. Some states may reflect on caveat emptor, but the majority of states are moving towards or have moved towards the consumer protection laws. So known material defects in the property have to be disclosed, and failure to do so could open up lawsuits or personal liability for those sellers. Question number 62. What is the primary professional responsibility of a real estate agent to their client? Letter A, to treat all parties equally and fairly. Letter B, to prioritize their client's interest above their own. Letter C, to secure the highest sales price for the seller. Letter D, to negotiate favorable terms for all parties. And the answer is letter B, to prioritize their client's interest above their own. So the primary professional responsibility of a real estate agent to their client is to put the client's interest above all others. And we use a phrase called a fiduciary responsibility. And a fiduciary responsibility means that you have to owe care, obedience, loyalty, disclosure, accounting, and confidentiality to the client, also known as the principal, okay? And the treating all parties equally and fairly, that could fall under the logic of how do we treat a customer and securing the highest possible sales price. Well, that isn't necessarily the number one prime responsibility, or to negotiate favorable terms for all parties. No, we're trying to negotiate favorable terms for our client. Question number 63. Which appraisal method is typically used to determine the value of a single-family home? Letter A, income approach. Letter B, the cost approach. Letter C, the sales comparison approach. Letter D, the gross rent multiplier approach. And the answer is letter C, the sales comparison approach. And so if we're trying to figure out what a single family property is worth in sort of anywheresville, USA, then we're going to use the sales comparison approach. Don't forget that we call the sales comparison approach the market data approach in some jurisdictions. That's pretty normal. They'll flip those phrases. And the income approach we use for income producing properties, the cost approach if we're trying to value unique properties, and the gross rent multiplier approach is a subcategory of the income approach, which we use in income producing properties again. Question number 64. Which of the following is an example of a zoning ordinance? Letter A, a law requiring homeowners to pay property taxes. Letter B, a rule that limits building heights in a specific area. Letter C, a regulation mandating the disclosure of lead-based paint. Letter D, prohibitions on painting homes certain colors. And the answer is letter B, a rule that limits building heights in a specific area. So again, all of these could be restrictions, laws requiring homeowners to pay property taxes. That's statutory laws, and a regulation mandating the disclosure of lead-based paint. And again, that's another statutory law. The prohibition on painting homes certain colors, that's another type of law. However, an example of a zoning ordinance would put limits on building heights in specific areas, and those are pretty normal. You're going to see the things in zoning ordinances under the sort of the government powers chapters of your books. You know, policing powers, eminent domain, taxation is cheat, that kind of stuff. It all falls under the world of policing powers. Question number 65. What is the process called when a private property owner voluntarily grants land for public use, such as for a park or road? Letter A, easement. Letter B, conversion. Letter C, eminent domain. Letter D, dedication. And the answer is letter D, dedication. All right, all of these are phrases for sure on real estate examinations, and you definitely want to know what the phrase dedication is. It is a high probability that you're going to see, I would bet, across the United States. So check it out. Remember these phrases. Number 65 here is a great question for you to sort of get your fingers around. What is a dedication? Question number 66. A buyer secures a loan for $280,000 at an interest rate of 5% annually. What is the first month's interest payment? Letter A, $14,000. Letter B, $3,421. Letter C, $2,267. Letter D, $1,167. And the answer is letter D, $1,167. Okay, so figuring out interest only is relatively easy. What they're going to do is when it comes to mortgage payments, you're going to have to use an amortization chart potentially on this exam. And you're going to also just need to be able to solve for basic interest only. And in this case, that's what we wanted. We wanted the interest only. So in this type of a question, all you need to do is you're going to take the loan amount times the interest rate. So $280,000 times 5%, which is times 0.05, and that's going to give you $14,000. Now, what some students might have picked was letter A because they're like, oh, there's my answer, 14,000, there you go, and then you're going to leave. But it's asking for what is the first month's interest payment. So now you have to take the $14,000 and divide by 12, and when you do that, you get 1,166.666666, and you're going to round up. So we round it up here, and in that case, we're going to get $1,167 of interest in the first month. Question number 67. Home inspections, zoning verifications, market research, and title searches are all part of which process in a real estate transaction? Due diligence, letter A. Letter B, land survey. Letter C, liability insurance. Letter D, assemblage. And the answer is letter A, due diligence. So, well put in this question is what is due diligence? And due diligence is all of these different things: getting home inspections done, getting zoning verifications, getting market research performed, getting title searches. All of this stuff is going to basically net out into what is due diligence. So you want to know what due diligence is, you will hear that phrase in practice, in professional environments, in professional settings. Due diligence, do your due diligence. That just basically means doing your homework, and doing your homework in the real estate business means all of these things: home inspections, zoning verifications, market research, and title searches. Question number 68. In a tenancy in common, how do multiple owners hold ownership shares? Letter A, equally with automatic transfer to surviving co-owners. Letter B, independently with distinct ownership shares. Letter C, jointly with equal authority over the property. Letter D, with the right of survivorship. And the answer is letter B, independently with distinct ownership shares. So you are definitely going to need to know a little bit about tenancy in common, joint tenancies, tenancy by the entirety, and community property. These are the co-ownerships, and you'll learn these in interest in real property. You could be in the deeds chapters of your books. So you're going to want to look through those or just search for those vocab phrases as you're studying. And when you do that, you're going to find out that the tenancy in common, number one, has no right of survivorship, and number two, each owner has an independent ownership with distinct ownership shares, and it's the only form of co-ownership, meaning more than one party owning it, that can have disproportionate ownership interests. So one party could, for example, own 90%, and the other party could say own 10%. Question number 69. A family-run convenience store has been in business in a mostly residential neighborhood for over 50 years. Recently, the town passed a zoning ordinance prohibiting all neighborhood retail businesses. The convenience store, letter A, will have to close before the end of the calendar year. Letter B, can remain open under the Urban Planning Zoning Act. Letter C, can remain open if they have or add an apartment above the store. Letter D, can get a zoning variance for non-conforming use. And the answer is letter D, can get a zoning variance for non-conforming use. So this is all, again, going to be found in the policing powers section under the sort of government powers. And this is zoning. And a zoning ordinance, it might be passed that changes. Zoning is not static. It's ever moving, ever changing as society changes. So the needs of the society can vote and change zoning ordinances. And in this particular question, that's what was going on. But a pre-existing use has been in effect being used for all of these years prior. And many times what they call that is grandfathered in. So grandfathering is another vocab phrase that you see in the section. And so if they're doing that and there has been this change in the zoning ordinances, well, then they can apply for an exception to the zoning rule, which is called a zoning variance. And they're looking to be using that property in a non-conforming pattern because the current zoning law says that that's no longer allowed. Question number 70. What will generally happen to the price of existing homes if a neighborhood has a growing demand for single-family housing, but the land available for new construction is running low? Letter A, the prices will increase. Letter B, the prices will decrease. Letter C, the prices will remain the same. Letter D, the prices will fluctuate unpredictably. And the answer? Letter A, the prices will increase. So I want to reread this to you. What will generally happen to the price of existing homes if a neighborhood has a growing demand? So the demand is increasing for single-family homes in that area, so there's a big demand for them, but the land available for new construction is running low. So we have a limited supply. So what happens to prices typically if there's a high demand and a lower supply? And in that particular case, basic macroeconomics, the prices of these properties, because now they're in demand and we have a limited supply, will go up. Okay? So you want to know some basic macroeconomics here, just supply and demand, and that's going to serve you well. You might see one or two questions like this on the exam. They're the easy ones that you want to be able to get, move aside, and keep moving forward. Question number 71. Which of the following is a type of involuntary lien? Letter A, primary mortgage. Letter B, HELOC. Letter C, reverse mortgage. Letter D, judgment lien. And the answer? Letter D, judgment lien. So a judgment lien is a type of involuntary general lien that affects all property. And you want to know some of those basic definitions, like judgment lien. You want to know like mortgage lien, real estate tax lien, mechanics lien, all of these different types of liens and their sort of categorization. You know, are they voluntary? Are they involuntary? Are they statutory? Are they equitable? Are they general? Are they specific? And sort of the combinations of all of those. And in a judgment lien, it is an involuntary, I didn't want it on my property, and it is a general lien, which can affect all property, both real and personal. Question number 72. An option to purchase a contract is considered binding to which of the following parties? Letter A, the seller. Letter B, the buyer. Letter C, both the buyer and seller. Letter D, neither the buyer nor the seller. And the answer is letter A, the seller. So the seller in an option contract is also known as the optionor. And then the buyer in the option contract is also known as the optionee. So you want to check your contracts chapters and look up optionor, optionee to kind of understand it. Now, remember, an option contract is a unilateral contract. And unilateral simply means that only one party needs to be bound while the other party has the option to not be bound. So there is one party that is definitely bound in an option contract, and that's the optionor. And the optionor is the same as saying the seller. Question number 73. In a real estate transaction, a person who authorizes another to act on their behalf is called letter A, an agent. Letter B, a principal. Letter C, the power of attorney. Letter D, a designated agent. And the answer is letter B, the principal. So in a real estate transaction, a person who authorizes another to act on their behalf in a real estate transaction is also known as the principal or the client. the power of attorney is authorizing a party to act on their behalf, but it doesn't necessarily mean in a real estate transaction. A designated agent and an agent is the opposite. So we're empowering the agent to act on our behalf, or the designated agent. So the answer here is the principal. And don't forget, the principal is also referred to as the client. Question number 74. What federal law addresses the cleanup and remediation of hazardous waste sites to protect human health and the environment? Letter A, Clean Air Act. Letter B, Clean Water Act. Letter C, CERCLA. Letter D, Brownfield's Law. And the answer? Letter C, CERCLA. So this is going to be found in the environmental sections of your book. You definitely want to know a little bit about a few of these, like the Clean Water Act, the CERCLA law, the Comprehensive Environmental Compensation Response and Liabilities Act, and then the Brownfield law. And I would say that the two that you'll typically see is the CERCLA law, which is also known as the Superfund law, and then brownfields. Now, brownfields are to clean up a derelict, defunct, and abandoned industrial waste sites. And this particular question was referencing cleaning up and the remediation of hazardous waste sites and protecting human health and the environment. And then the CERCLA law is the law that does that, the Superfund law. It is currently enforced and administered and overseen by the EPA on the federal level, the Environmental Protection Agency. Question number 75. A tenant is signed a 1-year lease on a commercial property. If after 3 months, the leased property becomes unusable for the purposes stated in the lease, the tenant may have the right to abandon the premises. This action is called letter A, condemnation. Letter B, alienation. Letter C, constructive eviction. Letter D, abandoned lease property. And the answer? Letter C, constructive eviction. This is a textbook definition of what a constructive eviction is. And you want to know what that is. Again, they were crafty here in this question. Condemnation and alienation. Yeah, kind of similar, right? Like, so they're kind of playing around with these vocab phrases. Both are real legitimate things. And abandoned lease property, that's sort of, I would throw that away. But the constructive eviction, because I mean, you might say if you didn't know any better that the abandoned leased property is the answer. But the reality is that they were looking for in this condition, and the tenant may have the right to abandon the premises, then that's known as a constructive eviction. And then the opposite of constructive eviction, or not the opposite, but the other phrase that you see is an actual eviction, which is the standard eviction that most people have in their minds. You know, someone doesn't pay rent, for example, and then the landlord, sues to remove the tenant from the property. That's the actual eviction. And this is the definition of a constructive eviction. So you want to know what a constructive eviction is for sure. Obviously, you want to know condemnation, alienation, and constructive eviction. All right, I hope this was helpful in your studies for the real estate examination in any state, anywhere, everywhere. This is going to help you out. Now, this was installment number 3 in our 100-question mega pack for 2025 to help you get through the examination. My name is Dee. Thank you very much for tuning in. I look forward to part 4 coming up real soon. Good luck with your studies.